Hey guys, this is Rudy for Mr. Investor, or otherwise Mr. Oxy, as some of you prefer to call me, coming at you live from Florida. It is December the 26th, and I thought it is time to make a video about Occidental Petroleum. So who would have thunk, right? Time to talk about Occidental. So in this video, I'm going to chat a little bit about what we can expect and where Occidental might be going. And then we'll see what happens and see how you guys react to my comments and predictions in the comments. So stay tuned.
This is what you came for. This is what you came for. I'm over. This is what you came for. I'm over. This is weird. She said, I'm ready. So come and get me. I'm over here. I'm over here.
All right, guys, this is my big sort of macro question for what's ahead of us. What's next for Oxy? Is it $15 or is it $25? Who knows, right? So a few months ago, in fact, 3 months ago approximately, I made this video and I said, what's next for Oxy, $5 or $15? In fact, by the time I made the video, Occidental had pulled back a bit and I said, what's next for Oxy? $3 or $15. As one can expect, people respond very kindly. At that point in time, on October the 1st, when I made the video, Occidental had pulled back to $9.68, and a few people sought to educate me, which I really appreciate. This guy, CBS banker, I'm sure he doesn't work for CBS News because otherwise that would just be fake news, and he's a banker. So the two together kind of don't make sense. But anyway, he gave me some advice and he said, Rudy, cut your losses. See you when Oxy hits $6 by the end of the year, and I'll save you a cool 30%. Thank you. So thank you for that information. Thank you for sharing the information with me. I hope you weren't short at the time, because if you were probably losing your wits. And if you were long Oxy and you sold, you probably wish you had not sold it at $9.68, which was the price on October the 1st. So let's take a quick look here at energy shares versus the broad stock market. So this is not Occidental, but actually the S&P 500 energy index in orange compared to the S&P itself for the past year. So November saw a quick and strong uptick in the energy index as a whole, and obviously Oxy outperformed the energy index. And energy is still lagging for the year because so far, year to date, the S&P is up 13.6% at the time of the slide, and the energy index is still collectively down 37%, almost 38%. And it has significantly underperformed the S&P 500 since the financial crisis. So now about 12 years ago, the S&P is up 442%, which I'm sure you will agree is phenomenal and very, very good for people who are invested in the stock market. On the other hand, the energy index as a whole is still down by almost 10% over a 10-year period, which means one of two things. Either the energy index as a whole is really, really cheap, or otherwise it's the end of the world as we know it, and we will no longer be using fossil fuels for the next few generations. I'll just report and you can decide. So let's take a quick look at Oxy. For the week of November 23rd, this was a month ago. So by the way, every week I get a little email from Occidental saying this is what happened for the past week. So during November, obviously Occidental spiked, and we saw for this particular week, and I chose it because it had Thanksgiving in there, which means the markets were closed on the Thursday. We saw a huge uptick on the Monday, almost 17%, followed by another 6% on Tuesday, a very tiny little pullback on the Wednesday, and almost 1% pullback after the Thanksgiving holiday on the Friday. The other thing you can notice, which you might not necessarily be able to follow down here, but basically the volume of shares was a little higher Tuesday as opposed to Monday, which was sort of more sort of typical or more average at around 5, 6, 7 million shares traded per day. So almost 10 million shares traded on the Tuesday. Why, you might ask? Well, the reason is quite simply that on Monday, Occidental went up 17%. And on Tuesday, a whole lot of people sold some Occidental and took profit. How about this past week? In other words, the week that we're in now and that we just exited. And I did not include Friday because Friday was Christmas Day and the US stock markets were closed. On Monday, Occidental pulled back 5.6%, another 3% on Tuesday, but then it bounced back almost 6% on Wednesday, effectively wiping out Monday's loss. And on Thursday, it pulled back a little bit more. Now look at the volume again. So what we have here is you see that the average number of shares traded, the volume, around 5, so a little bit less than a month ago when we were trading 6-7 million shares per day. So this is down by approximately a million or so compared to last month. And then, of course, we see the Thursday inactivity in the market with shorter trading hours was only 1.4 million shares traded. So we didn't see a massive sell-off here, and we didn't see too much movement. In fact, it's very, very ordinary and almost typical in terms of Occidental's everyday normal trade. We have had a couple of spikes. So in the past year, you'll notice, obviously, everybody by now knows that there was a massive crash going into March, April, as the world started getting more and more scared of COVID. And then as the shall I say, the fear dissipated somewhat, or otherwise there was some reasonable return to normalcy, maybe. There was some good news on the OPEC front in terms of production, and we saw Occidental spike to $24.35, and that was on June the 8th. Since then, since that date, it went on a sort of fairly steady decline. And we saw it obviously all the way down to about $9 at the beginning of November before energy spiked. And then we hit another high here. This little peak over here was $21.13 or $21.31 just a few days ago, a couple of weeks ago. And now we're back down to $17.65. So don't forget that my macro question, or the theme of this video, is where is Occidental going next? $5 or $15? If we look at the chart, we can see that every time over the past 3 months, we had a huge spike on one day. It was followed by a huge decline the very next day. And you can see this again over here. At the beginning of November, we had a huge up day, and the next day, everybody just sells out of Oxy. So if you do get a spike, expect to see a lot of people running for the fences, taking profit, and maybe getting out. The black line over here is Occidental. And the pink line is the energy index. So you can kind of see they follow each other very, very closely, except for these anomalies, right? So you always see a massive spike in Oxy, only a small little bump in energy as a whole. And then the very next day, people sell to take some profit off the table. And then as the market declines and goes up or whatever, we see the same thing happen again. There's a very, very minimal spike over here at the beginning of November, but Oxy jumps and the very next day crashes again. But watch the trajectory of these two lines. They kind of follow each other more or less. And of course, Occidental has been outperforming the index and doing so quite nicely over the past few months. So the first one we want to look at over here, and I've just included two analysts because one says sell and the other one says hold or buy or whatever. So the first one I want to share with you is the Chief Clown Executive Officer from the street, who basically says sell, and they give it a rating of D. And then effectively, since the street went public, including on TV, saying sell Oxy, I run away and sell it now, Occidental's price change over the past 3 months has been positive 61.7%. You may argue, and you may argue quite correctly, that yeah, it's easy for Oxy to go up when it was down to less than $10 per share. But the counter argument would be that's exactly why we invest in the market, to find undervalued stocks and buy them when they are super cheap. So that's the street. How about Market Edge? So Market Edge, on the other hand, upgraded Occidental in November on the 23rd, so about a month ago. They upgraded Occidental from neutral, and since they upgraded the stock, it's up 31%. and 33 days at the current rating. So, you always have this situation where there's always someone on the other side of every trade, right? So in this particular example, the street was saying sell, 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 and Market Edge was saying we're going to upgrade this stock, and they upgraded it from neutral. And you can see the charts here. The lines, the orange line over here is the 200-day moving average, and the blue line is the 50-day moving average. So we can kind of see where Oxy is going and where it's trading, where it is right now at around $18. So here's some information that might give you a little bit of confidence in terms of where Oxy is right now. The current condition for Oxy, or conditions for Oxy, are strong. The positive condition of the underlying indicator should keep the current uptrend intact. Oxy has outperformed the market over the last 50 days as compared to the S&P 500, as I just mentioned a little while ago. The MACD long term, so MACD for people who don't know, is the moving average divergence, is confirming that the intermediate term trend for Oxy is bullish. There has been more volume on up days than on down days, indicating that Oxy is under accumulation, which in itself is a bullish condition. Oxy is trading above its rising 50-day moving average, is also trading above its 200-day moving average, which means the intermediate term is bullish. If we take a quick look at here, this is from TipRanks, and they're sharing sort of what the analyst forecasts are for Q4 of 2020. We're looking at earnings per share of negative 62 cents on sales of 4.2 billion, and the earnings reporting date coming up in the future is on February the 4th. How did they get to the 62 cent forecast that they had in here? So Analyst Forecast for quarter 4 2020, earnings per share raised from negative 99 cents to negative 25 cents, which gives you a consensus estimate or an average of 62 cents. And guys, this is an important point as well. You can probably assume that analysts, especially some of them who do this every single day, some of them specialize in energy specifically, some of them even specialize in just one or two stocks within that sector. So there's a difference between being an analyst in the energy sector and being an analyst that specifically targets Oxy and pays close attention to what they're doing. But even then, what I'm sharing with you here is that their forecasts are all over the map as well, because you have negative a quarter to negative $1 with an average consensus of 62 cents. So effectively what I'm sharing with you is just that nobody really knows. But don't forget, my macro question was, is Oxy going to $5 or is $15 or is Oxy going to $25? Let's take a quick look at what the US Energy Information Administration expects. So the first thing that's interesting up here is it gives you the average for WTI dollars per barrel, 2018, 2019, 2020, and 2021. Now, of course, we know that 2020 was a terrible year, but you can see that there's an uptick of about 15, maybe even 20% going into 2021 in terms of the EIA's expectations. They expect Brent, this was WTI at the top, Brent prices will average $49 a barrel in 2021, up from an estimated average of $43 a barrel in Q4 of 2020. Inventories will remain high, but will decline with rising global oil demand and restrained OPEC oil production. The higher expected Q1 prices reflect steeper expected global oil inventory draws as a result of the OPEC decision to limit its previously planned production increases. The EIA expects high global oil inventory levels and surplus crude oil production capacity will limit upward pressure on oil prices through much of 2021. That's kind of a long sentence and it's a mouthful, but it's good news. The EIA expects high global oil inventory levels and surplus crude oil production capacity will limit upward pressure on oil prices through much of 2021. That is their expectation, based primarily on current inventory levels and surplus crude oil production capacity. We'll see if they get it right or if they get it wrong. Regardless, they have a forecast for WTI of around $46 and for Brent of about $49, which is at least stable or otherwise a bit of an uptick. So what we have today, as of today being December the 26th, we have 21 analysts that I could find offering 12 months price forecast for Oxy with a median target of $18. Well, we currently are at $18. And once again, much like I said a minute ago when we talked about the EPS, they're all over the map because you have analysts, and there are 21 of them, with a median of 18. The high estimate is 29. The low estimate is $8, which means effectively, if you look at all 21 of them, someone's going to be right, someone's going to be wrong. And for the most part, you can just conclude that they do not know. What I would like to share with you is my common sense prediction. And my common sense prediction is we will see $25 during Q1 of 2021. So guys, that's a wrap on this particular video. Let me know in the comments what your expected stock price is, or when we'll hit the 25 or even the 15, whichever way you are leaning. Let me know in the comments. As usual, if you have not subscribed to my channel yet, I would really appreciate it if you hit the subscribe button. And on that happy note, this is Rudy saying goodbye for now. Stay safe, take care. And this is Mr. Oxy signing off. Bye-bye.